All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. A very just kind of one of those days in the market where you got to zoom in to see a whole lot, and for the most part, most of the price action not all that significant, not a ton of volume in it, and really not even a lot of news in it. And the places where there is a little bit of news, some of the home builders, some of the trucks, some of the some of the retailers. There's a decent kind of move, but overall, this is gonna kind of go down as one of those days in the market that really meant nothing for the market as a whole going forward. But if you're an energy trader, yeah, today's a big day. If you're in the home builders, retail, yeah, there's some stuff going on there that definitely needs to be paid attention to. Now, this morning I showed the 3-7 crossover scans here in the market, and this kind of looking at the 3-day moving average crossing above or below the 7-day moving average, which is the trigger point for the challenge trades, right? It's not the algorithm that drives it, but it's the trigger point here for it. I was asked to show the scan here again, so I have it up here on my screen, and I'll run the scan here as well. But you can see on the scan here, I have group 100K challenge. It's just a group of the stocks that are on the challenge watch list for this challenge. I don't have anything else in that because, well, all the stocks are in there with the basket that I created. And then the technical expressions are down here below, and they're very simple if you use the MACD line. It gets a lot more complex if you're trying to, put the 3 and the 7 in there. And you could do it. It's not that hard, but it's just simpler code with the MACD line. Because if you think about what the MACD really is, the MACD is just looking at differences between exponential moving averages, right? So, if we say, hey, we're just looking for, when that difference actually changes and, crosses above zero. If it crosses above zero on the 3-7 MACD, we know we have a 3-day exponential moving average moving above a 7-day exponential moving average. And if the 3-day exponential is moving below the 7, we'll see the MACD line go into negative territory there. And we've done trainings on the MACD. If you go into the video library, they're there if you want more of the details there. But this is the simplest technical expression. So it's just looking for yesterday where the 3-7 MACD line was greater than 0, and now looking for it to be less than 0, right? And if we run this scan, we're going to get probably Verizon, AT&T as well, and we can look at what these stocks are doing right now. And you can see that here for AT&T, we have our blue line going down below our red line here. So we have the 3-day moving average moving down below the 7-day moving average, right? And you can kind of see that here in the numbers as well on the left-hand side. So that's the scan here for it. And again, just because it has a 3-7 crossover doesn't mean it's a challenge trigger or anything like that. There's a lot more to it, but this is the basic part of it. So we could come in here, we could scan for the upside crossovers. So we'll say yesterday our 3-7 MACD line was below 0. Now today we want it above 0. We hit run scan, and it's going to probably give us gold, GLD here, and we can see that with GLD, we have the 3-day moving average moving above the 7-day moving average here today. Okay, and you can see it in the raw number right over here to the left-hand side. Okay. GLD is the only potential challenge trade here on the board, and in about 4 minutes, I'll take a look at the scan and and whether it is or not. And if it is, we'll go after it, and if it's not, we'll wait. We'll continue to wait here. The options. I looked at the options on GLD before I jumped on video, just because I knew it had the potential. But if we're going to go 30 to 60 days, we have kind of the 5th of July out to the 19th of July. The 19th of July, they're going for about $2 here at the money. The 121s, which are now they're about 60 cents in the money here. There's plenty of volume. There's plenty of liquidity. The options are plenty good here. There's been some interesting volumes, floating about them. If we come in here to the 5th of July, you can see the options are significantly cheaper, but the spreads are also, very tight. So they're not, it's not something where we look and go, well, the weeklies, they're not very tradable. You'll notice the open interest is really low. Why? Because some of these have just been released, right? So the open interest is going to be low, but they're very tradable, very usable here when it comes down to it. We've talked about for gold to go bullish, one of the things that it has to have is we need to see the GDX outperform gold, where the gold miners actually outperform. And we're seeing that here today. Now, the one reason I'm not convinced that we'll see a signal is because if you look here, the GLD is trading near the low end of its recent kind of 39-day range. And, we can see that here in the stochastics 39. It could still trigger. This isn't something where it has to, move above 50. It can move above 50 as it runs. But, it is something where that may not trigger there. You can see the ATR on it. It's only 77 cents. It is really a tight ATR here for the GLD, and it's just not a big ATR. So if you look at the options, right? And, we come in here and put the delta on this, right? And let's just say, okay, a dollar, the dollar is going to be what, about the 30% loss here on the option, here, which is about what we want to see, about a 30% loss if it goes against us. And, if it goes our way, we want to make sure we have plenty of reward potential over 100%. We'd need about a $3 rally to get that. A $3 rally would take it up here into this kind of 124 and a half, which isn't anything outside the realm of possibilities. I mean, that's a very realistic price target here for it, and for gold here overall. The only other gold that is on the challenge watch list is GOLD, and this is nowhere close to triggering. This is just nowhere close to triggering. It has carried on lower throughout the course of this month of May. May historically has been a very bearish month for gold. June seasonally isn't the most bullish month, but it's definitely better than May. July, August, gold tends to pick on up, August being one of the better months historically when it comes to trading the yellow metal. So I'm going to pause here for just a second, just running the scan here off on my other screen. See where that lands. All right, looks like we are good to go. Looks like we're good to go with the signal here. So, have to decide which option, to go after here, to go into trade. I'm just going to go with the July monthly. Keep it simple here. The July 121, they're going for about $2. We have $4,000 in the challenge right now. And, you can see trade allocation about 40% per signal. Drop it to 30% after 3,000 worth of gains. So here we're going to put about 1,500 here on the trade. Here on GOLD. And so to do that, what do I need? I need, 7 options? 7 or 8 will get us about that. Let's just go with 7, lucky number 7. And this is the 19th of July 121 call. And I'm just putting in a 202 limit order here for it, and it is filled here at 202. So let me make sure the alert goes out. We'll go fill in the spreadsheet here. So bear with me for just a second. I have to admit, I wasn't overly optimistic that it would trigger. So I didn't have it already here on the alert, but it's not going to take very long here. But GLD is the ticker, and the price 202, which is the current bid price here on it. And the contracts here on there, 7. And this is the 19th of July. 19th of July, 121 calls. Okay. So let's preview that. 7 contracts, 202. 19th of July, 121 calls. Send notification. Boom. It is out and rolling. Let me just wait for the thumbs up to make sure that went out. And I am getting the thumbs up that it went on out, so we're good to go. Okay, so we're good to go here. So into some GLD, which is the gold ETF here. So let's come into our spreadsheet and let's fill in the data here. We have a signal here this afternoon. GLD bullish. And again, this has nothing to do with the market and the S&P and all of that. This is something that please don't read any market element into it. But the entry date here is 5:30 p.m. Afternoon session, and we already talked. It's the 21st of June. Okay, 21st of June. 121 calls. All right, option entry price 202. We did 7 contracts, so similar size to J&J there. Now the entry price on GLD, when getting in here, 121.60. All right, so 121.60. And the average true range, we already talked about, it's pretty low here. Let me pull it back up. Average true range is 78 cents, right? 0.778, so we'll round that up to 78 cents there with it. So that's going to give us an exit level on the stock of 120.82, be the stop level. 123.16 is the profit take level there for that. And then we'll just get this to populate the GLD price. Again, these current stock prices, those are a 15-minute delay. It's from Google, so it's not the it's not right in depth there. But if our option goes red, our 3-day stop would be here for Friday, Monday, Tuesday. So Tuesday afternoon, so June 4th, so 6:04 p.m. And the auto exit date for a gain would be 6:06 p.m. Okay, and we're still in the trade, and current price 202. So we have cash in about 1,400, and cash out about 1,400 where it is right now. Gain, loss, 0. All right, so we have all that filled in and ready to ready to go. All right, and trade. Let me just scroll over here and click on open. All right. So pretty simple, pretty straightforward, and off and rolling. And we have plenty of cash to jump into the next signal. So hopefully we'll get that. Hopefully we'll get that soon. Okay. All right. So that's a GLD in the trade there. And again, you can see the 3-7 crossover happening. One of the things, and you'll see I have the 20-day moving average on here. The algorithm does take into account where the stock is relative to the 20-day moving average, to set these signals. And one of the things that it is, or that it does do, is it does add a weight to the trade in terms of higher potential for rally, or higher potential for trend, I guess I should say, the rally in this case, if the stock opened below the 20-day moving average and is closing above the 20-day moving average. And we do see that right here. Again, the 39.1 we're not above 50. But what's interesting about this is, this is the best visual way to kind of take this. But if we lower this down a little bit, right, we take and we say 30 days, we're going to see the indicator looks a little different, right? We're almost above 50, right? This is one where it's it's one of those where the recent price action, it's actually trading better than what its 39-day suggests. If we zoom that in a little bit, we start getting a little bit closer. And again, this isn't in the algorithm. This is just me trying to visually show it. But the stock is trading on the higher side of its range over the last month, right? The low side of the range here on GLD has been down here at 119.5. The upside here has been 122.70. And where it sits right now, it's actually on the higher side, there to it. But, the way some of the stochastics data is calculated with the 39-day, it's still taking some of this action into account. So if we peel that off, we can kind of see the principle is there. But it doesn't have the exactitude of a 39.1, which none of the trades are going to have the exactitude of that, since just a visual there for it. Okay. So anyway, that's GLD and a running here with that. Now I was asked to show the scan on the 39.1 for not just the watch list, but for the S&P 500. So let me do that real quick. I'm going to run this scan. This is for the bullish 3-7 crossovers on the S&P 500. You can see there are 18 stocks here today. Accenture, Borg Warner. Interesting, Borg Warner there. But none of these stocks are on the watch list for the challenge. So SBAC Communications, very interesting, especially in light of some of the Sprint T-Mobile merger deal there. Deere, that one's interesting. Yeah, finally having a little bounce here in Deere. Okay, but those are the upsides. The downsides here on the S&P, the 3-7 crossovers to the downside, and again, these aren't signals or anything like that. I'm just showing this as I was asked to, and I'll try to show this every day. But you can see downside AT&T Visa, or excuse me, AT&T, which is on the watch list. Visa, which is on the watch list, has a downside 3-7 crossover, but neither of those have bearish signals associated here with them. Okay, Merck, another pharma, big drug maker, a few financials, some of the more regional types, L Brands, Mohawk. So anyway, those are them. All right. So that's the entry here into a GLD. Take a look at JB Hunt. JB Hunt has had a really rough go on it. Really, the stock is just has not been treated kindly. It's been selling off aggressively here as of late. And bear with me for just a second. I am getting a note here about my volume. Okay. All right. They tweaked something on my soundboard, but yeah, that's probably not going to affect most of us. Okay. But JB Hunt. Right, JB Hunt, trucker, and interesting company. Not one that I can put for the challenge because of the way the options trade, but it was reported here today that their CEO, John Roberts, bought $200,000 worth of shares, and he bought them on the 28th, so 2 days ago, and about 2,000 shares here. Not a huge amount, but stepped in and bought some here. It was on the same day that JB Hunt was downgraded at Bank of America Merrill Lynch and downgraded to neutral. So it's one where he kind of stepped in on this. We've seen some pretty kind of negative headlines when it comes to these truckers out of the Wall Street Journal and other publications. But the bottom line, the stock's been in kind of some free fall here. And today, when the news was released that he had bought some, we saw a little stabilization here in the stock. Now, there's another truck company, Knight Transportation, KNX, which has also been in free fall mode. Absolute free fall mode. But if we go and we look at the options here on KNX, we're going to see something interesting. We're going to see that there is some pretty hefty volumes around these August options. And I'm going to put the volume and I'm going to put the open interest here. But you can see the open interest here for August options on KNX is 34,000. So 5,000 traded today, 2,000 on the strike higher. But this isn't something new. There's some huge open interest here, right? Some huge open interest. If we take a look at the prices paid and what's going on here with this, let's just come in here. We'll chart it. Here's the options over the last, here's Friday. Friday of last week is right here, okay? So this is Friday of last week. But you can see big block volume here on Tuesday, big block volume on Thursday of last week, big block volume here today. Now, the reports are that this is bullish activity or long activity being a buyer here of JB Hunt. Suggests that, of Knight Transportation, and suggests that it's on the bullish side. I don't quite buy it because of how much open interest there is. This could easily be a stock protection type of play or a stock, short type of play where they're protecting some shorts, right? You know how you go and you buy stock and you basically go and buy some puts to protect your long stock, right? Buy insurance, right? The shorts then go out and short stock and then go buy calls to protect it. This is one of those situations where that's what it looks like they're doing. It looks as if they're going out and shorting Knight Transportation aggressively, but buying calls to protect that short position, in case something happens there. If you followed Knight Transportation over the years, this is not the first time that we've seen this. It is one of those, I don't know what firm, but we see this type of action come in from time to time. And it's one where, while the action is going, it's very negative. It's very negative for the stock, and it's very negative for the shareholders. But Knight Transportation has a history of really fast, sudden snapbacks. When it comes to the stock, even just kind of 3-day rebounds, 2-day rebounds, they can be very, very aggressive. And this morning we talked about the CCI, right? And how we're in this kind of market of some, chop, and when do some of these stocks get stepped in and get bought? When do some of them get stepped in, or do people step in and go out and sell them? Well, we can take a look at the commodity channel index and the overbought, oversold. And if you look at it with KNX, it's not oversold yet. But it's only going to take another day or two of selling to put it into a severe oversold situation. The reason that I brought up JB Hunt is because we are seeing JB Hunt hitting that severe oversold situation. This is one of those areas where, I don't advocate going and buying right here. Right, it's a hero trade. Right, you're trying to pick the bottom. Trying to be the hero there with that, and there's not enough here for it. But it is one where, with the option activity that we have seen in KNX, If we start to see KNX slide even more, let's say 27, 26 and a half is kind of the area that I'm looking at, and we see that CCI dip to below minus 250, minus 300, and we start to see any sort of buy pressure, we could see those shorts get reversed very, very quickly and see one of those really nice 2 to 3 day snapbacks. And I think this is one of the stocks out there that's really primed for it. It's not there yet, but getting close. And since we talked about the CCI here yesterday, it's just one where it's not quite, or excuse me, the CCI this morning, it's not quite there, but it is. It is getting rather close. There are some other stocks out there that are starting to get close, and we could come and run a scan and we could take a look and say, well, all right, let's go out and take a look at stocks whose commodity channel index, the CCI yesterday, let's say forget about yesterday. Let's just say today the CCI is less than or equal to minus 250, right? So minus 250. So we're just looking for S&P stocks where the CCI is below minus 250, right? And so it'll pull up some of these. We have 7 of them. Allergen, right? Caught up in the whole opioid pharma thing. Fox, Kellogg's, Kraft Heinz, Kimco, Macerich, TAP. Macerich CEO stepped in and bought some shares too. But these are stocks who, have the CCI. They're below minus 250. Let me show you what it looks like here. But you can see that's a big dip here in the CCI on Macerich. Now, Macerich isn't the type of stock I would buy based on a very low CCI. It's just a lot of times after its CCI gets overcooked, you see the stock flatten out, and that's not what I want to see. But some of these others, let's go take a look. Fox, that's an interesting one. Yeah, there's the CCI well below, but man, they sold their assets. I mean, you got Disney cooking with gas with Fox's assets. Wow, Kellogg. Yeah, so here we go. Here's Kellogg minus 350, right? And this is something where the chance of a snapback is very good, right? They have some issues, they have some reorganization going on, but where do you step in, right? Where do you step in? Yes, you have the oversold condition here, but stepping in can be quite dangerous when it comes down to it. So this is something where I just step into an hourly chart, and I'd look at it like this. Okay, on the hourly chart, as soon as the stochastics, the regular slow stochastics, goes above 20, there's the chance to step in. Until that, you let it bleed, you let it become more oversold, right? Moves above 20, there's your opportunity. Go ahead and get in. It will probably correspond to a move above the 7-hour moving average. They oftentimes will happen together, but if you just have one and not the other, it's just not normally as accurate. Kellogg's here, something with a very overdone CCI. You want a snapback trade. Boom, go to the hourly, look for the stochastics to move above 20, and there will be the opportunity to go ahead and jump into Kellogg. Okay. Last thing I want to look at is in response to a question about Procter & Gamble. I showed Procter & Gamble yesterday, talked about I bought some Procter & Gamble yesterday. I still have it. I'm not going anywhere here with it, but was asked if it could turn into a challenge trade. And the answer is yes, it could. Not the ones that I traded or anything, but, it would need a 3-7 crossover. And right now, the 3 and the 7, they're on the downside. Stocks, it's not going to happen today. It's probably not going to happen tomorrow, though I guess it could. Actually, it probably need about a 2 average shoe range. So, it would be tough. But, it could early next week. But would need that 3-7 crossover to go ahead and get in. Okay. Alrighty. Now, the market, as I mentioned earlier, I do think today is just kind of one of those days where market movement doesn't mean a heck of a whole lot. right? I think yesterday's action has significance, has meaning. But as I mentioned this morning, we don't see, we don't see big trend triggers coming in here for the upside, just yet. Could it happen tomorrow? It could. Last day of the month, typically doesn't. But a lot of times, first day of a new month tends to be pretty bullish there. So maybe, but we don't have to forecast when it's going to happen or how it's going to happen. But we see it happen. We'll be able to go out and react and take part of it. Okay. All right, so into some GLD for the challenge. Plenty of cash for another trade on the next signal, and we'll be looking for that here tomorrow morning. Have yourselves a great afternoon, and we'll talk to you later. Take care.